Welcome to the Recon Trader. In today's video, I will share with you the top 4 best indicators that I use when trading crypto assets like Bitcoin, Ethereum, and a variety of other altcoins. Now, before we get too far into the weeds, if you're not familiar what indicators actually are, they're basically used in technical analysis to forecast price patterns and or trends. An indicator is typically based on formulas that compare the size, time to develop, and the open and close prices of a candlestick in order to gather intel regarding the market conditions, such as overbought or oversold, whether the market is trending, is there volatility, and they also measure momentum. Now, if that all went right over your head, we can jump over to a candlestick chart and you'll see a few different indicators on the chart. The blue line that is moving through the candlesticks is an indicator we will be reviewing today. Also, this green squiggly line across the bottom of the screen, that's also an indicator. And as a bonus, volume is actually an indicator that helps confirm trends. And for example, these 3 red candles are basically a sell-off in the price. And you can see the 3 red volume bars building up, confirming the strength of this actual sell-off as a trend. And so with that being said, volume can be a very strong indicator and is often overlooked when doing technical analysis. Now, some other type of indicators include lagging versus leading. Both provide important intel. A lagging indicator results are based on past price action, where a leading indicator will point towards possible future price action. Now, the majority of the indicators we'll be looking at today fall under the lagging category, as they're looking at past priced action. But the best example of a leading indicator would be reading the tape, or the level 2s. Reading the tape is utilized by elite traders to determine where the price action might be headed by analyzing the order book, also known as level 2s. These order books include recent trades and open limit buy and sell orders. And so when you're trading on an exchange, the order book will include the limit sell orders, which are known as your ask, and the limit buy orders, which are known as your bid. And your level 2s will also include the recent trades, which are coming off of the order book. And so what you're looking for when you're reading the tape are any large limit sell orders, which could indicate resistance for the price moving up. And on the flip side, you'd be looking for large buy limit orders, which could act as support and keep the price from going down. And so what I'd be looking for is the price action over here to be moving in the direction I'm looking to trade. And I'd also be looking at the recent trades. If I'm looking to go long, I want to see a lot of green trades coming off the board. But with that all being said, I'm not going to do a deep dive on reading the tape in this video. That will be a future video. So now would actually be a good time to shoot that subscribe button so you don't miss that future video on reading the tape. So now we'll take a look at the 3 main categories of indicators, and that will be trend, momentum, and volatility. Now, your trend indicators analyze price action in a particular direction. Momentum indicators oscillate between defined upper and lower levels, and your volatility indicators analyze the degree to which the price is fluctuating. So while my number 1 indicator for trading crypto is actually reading the tape, which is the leading indicator, my number 2 indicator would be the moving averages, which would fall under the trend indicator category. Now, moving averages are a lagging indicator that are calculated over a specified period of time, thus creating a constantly updated average price. And the most common time periods used in moving averages would be your 9, 20, 50, 100, and 200 periods. Now, the shorter moving average periods are typically used for shorter term day trading, while the longer moving average periods are utilized for long-term investing. And in my day trading, I will utilize moving averages to identify trend direction and to determine support and resistance levels. And if we jump back over to the chart, the line you see moving through the middle of these candlesticks is a moving average. And in this case, it is a SMA moving average. And so by far the most popular moving average indicators are the EMA, which is an exponential moving average, and the SMA, or the simple smooth moving average. The only difference between these moving average indicators is the formula used to calculate the average price. The SMA weights all candlesticks equally over the determined period, where the EMA gives more weight to the most recent candlestick and is therefore considered a faster moving average. So if we jump back to the chart, the blue line you see moving through here is an SMA, and what it basically will do is take the average between the candlesticks based on a predetermined period. And in this case, that period is known as the length of 9. So it's going to look back on 9 candles and then come up with the average. And so if we go back 9 candles from this candle to approximately this candle would be 9 candles, the blue line will take the average of these candles and therefore give you a current average price. Now, the moving average I use the most is actually the EMA, and that would be represented by the purple line that just showed up on the chart. And as you can see, even though they're both calculating the moving average of the price over the same time period of 9 candles, there is a difference of where they plot along the chart. And if you look at certain areas, you will see where the blue line, which is your smooth or your simple moving average, is exactly that. It is smooth and rounded, where the purple line, my EMA, actually is a little more jagged or has points at certain levels rather than a smooth rounded top. And that accounts for more weight being allocated to the last candle in the 9 period for these candles. It's putting more weight on this candle than the SMA, because the SMA weights the moving average equally over all 9 candles. And I will often use a moving average to enter a position once the price has crossed above or below the moving average. And so when the price action crosses above, I'll be going long, and at that point I'll look for the moving average to act as support. And on the flip side, when the price crosses below the moving average line, I would get short and look for the price to go down and have the moving average act as resistance, keeping the price from going up. And again, I will do a more detailed video in the future on how I actually use moving averages. So again, you might want to shoot that subscribe button. Now, the next indicator we're going to take a look at falls under momentum indicators, and those oscillate between defined upper and lower levels. And in this case, that will be the relative strength index, or also known as RSI. And so as I mentioned, the RSI indicator is a momentum indicator which measures the magnitude of recent price changes to evaluate overbought or oversold conditions by analyzing candlestick sizes and how many of the previous candles have risen versus how many have declined during a given period. The default period is 14. I, however, typically use 9. So if we jump back to the Ethereum chart, you can see at the bottom of the chart, this is my RSI indicator. And RSI values are displayed as an oscillator between an upper level and a lower level, and those levels consist of 100 and 0. And in the world of crypto, a level of 80 is considered overbought, and the level of 20 is considered oversold. And so some traders will look at those levels as possible trend reversal levels. Now that can be very misleading, and a lot of times with crypto you will see the sell-off continue down below 20, or you will see the buying continue well into the 90 level. Now, rather than using the RSI as a trend indicator, I use it for momentum. When I see the RSI rising, I see that as momentum on the side of the buyers. When I see RSI falling, I see that momentum behind the sellers. So that is how I actually use RSI, is as a momentum indicator. And once again, I will do a complete video in the future on how to use RSI in your trading or with like crypto trading bots. If you haven't already, you might want to shoot that subscribe button. And then the final indicator would fall under the volatility category. And so that final indicator is Bollinger Bands, and Bollinger Bands were originally created by their designer as a measure of volatility. And so again, if we jump back over to the chart of Ethereum, we can see the Bollinger Band indicator consists of 3 different lines. The 2 yellow lines are considered the upper and lower bands, and when the market becomes more volatile, the bands will become wider, and as the volatility leaves the market, the bands will become more narrow. And so as a perfect example, you can see the big moves in price have the wider bands, and when the price goes sideways and there's smaller movement in the price, the bands get more narrow. And then the purple line running through the middle is known as the basis band, and it acts very much like a moving average. Now the upper and lower bands also act as an indicator for overbought or oversold. So the closer the price gets to the upper band, that would be overbought, and the closer the price gets to the lower band would be considered oversold. Now I typically will use Bollinger Bands along with the RSI and, for instance, moving average as a trigger to enter a position. So I might look to get long when the price has broken the lower band, and I would wait until the price re-enters that lower band and closes above the lower band, and at that point I'd get long. Same thing with short. I could look at the price exiting the upper band and start to get short. Once it comes back down and breaches and closes below that upper band, I would get short. And depending on the configuration, you can also use the Bollinger Bands for support, where you see the price rejects from the lower band and moves up. And you can use it as resistance, where you see the price bouncing off the upper band. And of course, I'll do a more detailed video on Bollinger Bands in the near future, so you know what to do. Shoot that subscribe button so you don't miss out on that future video. Now, when selecting indicators, it is recommended to only use one of each of the 3 categories of indicators to avoid redundant intel. So, for example, using RSI, Bollinger Bands, and EMA, you would be using one of each of the trend, momentum, and volatility indicators. Therefore, you would not be necessarily getting redundant intel. And as I mentioned, the tactical ways that I utilize indicators include determining entry opportunities, identifying take profit or stop loss targets, and of course, identifying support and resistance. So you might be asking yourself, well, what indicator is the best indicator? Well, as often is the case in trading, the answer is, it depends. Each indicator is a weapon developed for a specific objective. Therefore, indicators are best utilized together as confirmation of trend, momentum, and volatility. The bottom line is, no one indicator is better than the other. And that pretty much wraps it up. I just wanted to share with you the top 4 indicators that I use when trading crypto assets. So if you like this video, do me a favor and spike a like. Don't forget to shoot that subscribe button. And remember, never send your money into battle without first doing your recon. See you in the next video.